Welcome back to the Japan FinTech Observer. Get ready for a quick hit of the latest news in Japanese finance and fintech. We're diving into the headlines, breaking down the trends, and leaving you with the insights you need to stay ahead of the curve. Let's go.
The Japan Investment Corporation has published its Venture Capital Market Update for the first half of 2024. Here are the overall trends they have identified in the Japanese market. First, funding. Total funding amount peaked at 978.2 billion yen in 2022, followed by an 18% decline to 803.9 billion yen in 2023. The first half of 2024 showed a similar funding trend to the same period in 2023, reaching 325.3 billion yen. Second, fundraising. Domestic VC funds that began formation in the first half of 2024 raised 232.1 billion yen, nearly matching the total for the same period in 2023. Third, exits. IPO counts increased in the first half of 2024, with 21 startups going public, compared to 18 in the same period last year. M&A activity also saw an uptick, with 125 deals, a significant increase from 82 in the first half of 2023. Fourth, valuations. Median post-money valuations remained mostly flat across stages, except for Series D and beyond, where a slight increase was observed due to fewer low-valued transactions. However, this doesn't necessarily indicate an overall improvement in startup valuations. Let's take a closer look at some of the key observations. AI dominance. Funding for AI-related startups continues to be prominent, leading the overall trend with 74.2 billion yen raised in the first half of 2024. This highlights the growing focus on developing advanced technologies in Japan. Fintech decline. In contrast, funding for fintech startups, which had been a leading sector during previous boom periods, has significantly decreased from 57 billion yen in the first half of 2021 to 11 billion yen in the first half of 2024. This suggests a shift in investor focus towards other emerging sectors. Smaller deal sizes. The median amount raised per company from Series B onwards is declining, reflecting a trend towards smaller deals. This indicates a potential shift in investor strategies, favoring earlier stage investments and requiring startups to demonstrate stronger traction before securing larger rounds. No megadeals. The first half of 2024 saw no deals exceeding 10 billion yen, indicating a lack of megadeals compared to previous years. However, larger deals did emerge in the second half, such as Smart HR's funding round, including secondary transactions, totaling 21.4 billion yen. Valuation challenges. The valuation multiples for publicly listed SaaS companies remain low, hindering a broader recovery in startup valuations. This emphasizes the challenge of achieving high valuations in the current market environment. Down rounds on the rise. While some startups are managing to raise funds at similar valuations to 2 years ago, others are extending their runway through cost-cutting measures, alternative funding sources, or even down rounds. This highlights the increased pressure on startups to demonstrate consistent growth and profitability in a challenging funding environment. Financial institution dominance. VCs affiliated with financial institutions are actively participating in funding across stages, reflecting their increasing interest in the startup ecosystem. Government support. Government-affiliated VCs, like JIC Venture Growth Investments and the Japan Decarbonization Support Corporation, are also prominent investors, particularly in Series C and later rounds. This signifies the government's commitment to fostering innovation and supporting emerging companies. International interest. While international investor participation in large-scale fundraising rounds was limited in the first half of 2024, it has increased in the second half, with notable examples like Loglas and Smart HR. This signals growing global recognition of promising Japanese startups and potential for increased cross-border investment in the future. Overall, the Japanese venture capital market is experiencing a period of adjustment and recalibration. While funding activity remains at a relatively healthy level, the trend towards smaller deal sizes and the challenging valuation environment necessitate strategic adjustments from both startups and investors. The increased participation of financial institutions and government-affiliated VCs suggests a growing recognition of the importance of the startup ecosystem in driving economic growth. As international interest continues to rise, the Japanese startup ecosystem is poised for further development and evolution in the years to come.